Good morning, everybody. It's the 18th of July. We're back with another episode of Talking Ball. Hope everybody's doing great. I'm Joe, joined by Steve this morning. How are you, Steve?
Yeah, good. Thanks, mate. Not
Good,
too bad
good,
at all.
good. Okay, let's get into it then. So we're going to talk about the latest headlines. We are going to then look at some charts. We're going to look at cryptocurrencies, commodities, FX, and indices. If there are any requests for certain markets, please feel free to post them up in the chat, and we'll do our best to cover as many as we possibly can. But first of all, let's do the headlines and get those out of the way. So, yesterday, the Bundesbank held firm. In comments on Monday, the head Nagel stated that core inflation is very sticky and that there needs to be further rate hikes at the July meeting, while the September decision would be dependent on data. Markets remain extremely confident that rates will be increased at the July meeting. So we'll wait and see what happens there. With regards to what's happening in the US, we had some New York manufacturing index data out yesterday. And that was pretty mixed across the board. The New York Empire Manufacturing Index retreated 1.1 for July from 6.6 previously and above the consensus forecast of minus 4.3. Shipments increased at a lower pace and labour market indicators were stronger on the month, but there was a significant easing in upward pressure on prices paid and received. US yields continue to drift. Treasuries lost ground after the US Open with data the data dragging yields higher, but the Treasuries regained some ground later in the session with little net change in the yields on the session. The dollar continues to be unable to hold any gains. It secured a limited advance after the US data yesterday, but failed to make any significant headway, and the currency continues to hang around just above 16-month lows. We also had some US retail sales yesterday. The data, sorry, we've got US retail sales today. The data for June will be released later on. Consensus forecasts are for a 0.5% increase in headline sales for the month with a 0.4% increase in the core number. We've also got Canadian inflation data today. Consensus forecasts are for a decline in the headline rate to 3% from 3.4%, with the core rate at 3.4% from 3.7%. Those numbers sound nice. Not the case in the UK. We've got the inflation data due out tomorrow morning. That'll be out at 7 a.m. And the latest UK inflation data is suggesting that we are going to get a decline, taking the overall rate to 8.3% from 8.7%. Still a very lumpy number in the UK. And the core rate is expected to hold at around 7.1%. So let's see if these measures from the Bank of England are taking any effect, and we will get some indication on that tomorrow with that number at 7 a.m. Okay, let's get on to looking at some charts. Steve, if you wouldn't mind kicking us off with a look at cryptocurrencies.
Yeah, sure. I'll share my screen. Yeah, pretty scary numbers, Joe. I'd rather sort of like see, probably be more focused on the month-to-month number,
Yeah,
which, it will be a bit of a slightly negative number, hopefully. But yeah, because it's still frightening to think that this time last year we're still 8% above the prices, but then that sort of dissipates, doesn't it, over time? And the real inflation prices just remain in the economy.
yeah.
So not good.
No, not great at all.
Let's take a look at Bitcoin. Although the one really everyone's talking about at the moment is XRP. We'll have a quick look at Bitcoin because this has had a bit of a sell-off over the last few days. We had a big turnaround on Friday. Oh, don't want to see that yet. Big turnaround on Friday, and we're trading in this range. We're sort of like seem to be a little bit trapped within this range, and we were breaking down towards the support level yesterday. Got down to 29,675. The 29,500 is where the support is, according to this channel. From a technical perspective, you can see previously it's been quite a pivotal level, and it looks like we're forming. Well, we're potentially for a triple or even maybe a quadruple top here. If we've, and we're looking at this neckline, we're going to might as well say it's a bit of a range between 29.5 and 29,750. But yeah, basically that would a break of there and a close below that support would lead to targeting a measured move down towards about 27,500. Otherwise, from a bullish perspective, we're looking at potentially some sort of bullish flag where we've got this sideways range after the rally, and then the break higher. We're just waiting for that upsurging momentum. However, overall, it feels like the momentum has died down. We'll see how it plays out, but really within this range, it's a little bit no man's land. Wouldn't really worry about it too much. The reason for the rally, or one of the reasons for the rally, was this spike up in XRP, the Ripple case against the SEC. The Ripple have won it. SEC still have a opportunity to appeal it. So we're still in you know, elevated levels, but we're in a bit of a quandary. We're holding probably about 50% higher than we were for a really extended period of time. We can see we were trading in a range between 40 and 55 cents for a long while. And this is similar to what we saw just now on the Bitcoin, and obviously the bullish news about the winning court case exploded higher and almost doubled it. Well, did double in price at one point, got up to 95 cents, started at 47. So decent 100% up pip, and then pull back, and real value has been found around about 75 cents. So that's where we are at the moment. So once you have something like that, you get a bit of an explosion in price action on the short-term chart, and then you sort of like it's a little bit difficult to really sort of get some real levels to consider. But we've sort of found one around about the 67 cent level. This is on the 4-hour chart. That's where we pulled back to. So we should find a little bit support there. We've got the Ichimoku cloud has caught up a little bit again. Probably not an indicator that is very relevant at the moment until we do get some extended period on the 4-hour chart. And the next level to watch between or below that 67 cent level is probably around about 58, which was the previous swing high that we were focusing on as resistance. That will turn into a bit of support. So yeah, just have to see how that plays out. We've sort of posted a few lower highs, which doesn't look promising, but still early days, and still yeah, a lot to go through before we really find out whether this case with the SEC and Ripple is done and dusted. Let's move on to commodities. Looking at gold first. And gold is there's a 4-hour chart where we've got this inverse head and shoulders formation. That's got a measured move target of 1980. We've broken above the neckline quite clearly. Neckline is around about 1935, so that's the short-term major support level. Resistance wise, we're looking at 1964 as that's capped prices at the moment. And again, you can see this sort of like bullish flag, bullish pennant type formation forming. So plenty of opportunity to the upside, and a break of that measured move target for that sort of like flag or pennant would be around about a 60 or 70 point rally from these sort of levels. So that's will take us well above the 2000 level. At 2000, we do have a 61% Fibonacci retracement level. So there's some decent levels, and we've also got a 161.8 fib extension level coming in at 2005 on gold. So they're the major levels to think about. 1980, the first one, and then on the downside, obviously we've got support around about 1945 from yesterday's low. 1935, the major support there. A break below 1930 opens up the downside again. All really sort of like pinned on the dollar. We're sort of, as Joe was saying, the dollar's at those extreme lows that it hasn't been for a long while, and a further extension lower should lead to an uptick in gold prices. The dollar price obviously affecting oil as well. Let's see if I can remember to update the oil chart. Yeah, there we go. Starting to get the hang of this now. We've seen price action top out on WTI crude oil. 77.17 was the high, and since then we've seen that retracement. We had a gap lower open on Monday, and we were trading around here, and I said we'd probably get that gap fill before the pressure continues, and it's done that. We seem to be holding around about $73.80 to $74. That support. We've got Ichimoku cloud support as well, and horizontal support under that comes in around about $72.50. So yeah, just watching that price action closely. Potential for a downtick there. Obviously, got the oil inventories out tomorrow, but we've got 24 hours to have a bit of fun with this, or just over. That's about it on there. We can take a look at the dollar index and what's going on in the currencies through Joe.
Yeah, let's do that. So let's take a look at the dollar index to start. Be helpful if I share my screen, and I'll do that now. So as mentioned, this is hanging close to 16-month lows. So we saw this pretty nasty breakdown that occurred last Wednesday. Big red candle taking out that major support at 100.82. We then saw a further red candle. We saw the big 100 level potentially offering some psychological support. Often these round numbers do, but it just sailed through that level with relative ease, although it does appear as though that level is now acting as a bit of a resistance level. So it wasn't really a clear level in a conventional sense, in that we expected it to hold support, judging by what it done previously, but we can clearly see that it is acting as a resistance level. The attempt at a rebound on Friday was capped at that level. On Monday this week, we saw an attempt at pushing through it, but then closed back below it. And this morning, we are on the back foot once again, down by 0.27% as things stand. So my next level of support is this blue line, which dates all the way back to March 22. That comes in at 99.42, so expecting that to potentially provide some support, and maybe we might get some support from the Friday low. And then below that, we've got this 61.8% fib level at 99.17. Now, we've also seen a similar level being reached on Euro US dollar. So if we flip the dollar index chart around, what we'll actually see is pretty much the chart for Euro dollar. So we saw a big break to the upside on that Wednesday, which coincided with that breakdown on the dollar index. That took out the 110.95 level. And now we are very, very close, within a couple of pips of reaching this 112.74 level, which is a massive 61.8% fib level. If we scroll back to the left-hand side, we can see these highs from January 2021 down to these lows in September 22. And if we take a measurement of that entire move, the 61.8% fib level comes in pretty much here. So is that going to trigger any potential profit taking? Potentially some traders taking some money off the table after what's been a very good run. If we look at the RSI, we can see that we are heavily overbought. That's trading at 76 at the minute. And we have to go back some way from when we were last trading at those levels, which is back here in August 2020. Now, before the actual down move occurred, what we saw was some bearish divergence on the RSI, and there's no sign of that happening at the moment. So it does still look very strong, very robust, and no immediate signs of a pullback occurring on this at the moment. Let's take a look at sterling versus the US dollar. That continues to move to the upside, broke easily through that 129.81 resistance level and showing no real signs of slowing. Yes, we've seen a couple of days of red, but any pullbacks are now likely to be limited to that newly formed support at 129.81. So looking pretty strong there indeed. Let's take a look at some of these other dollar markets. Look at dollar yen. That's had a nice pullback actually to support following that move higher that we saw. It's been a pretty severe move to the downside, but there is support around here between 138.20 to 138.25, which seems to be holding for the time being. We posted a bullish outside candle on Friday, which was encouraging. Let's see if that can continue to hold in short term and we can get any relief in the US dollar. What other currencies should we take a look at today? Doesn't appear to be any requests coming in, so I'll just have a glance through maybe some of these other dollar majors. Let's take a look at the commodity ones. So Aussie US dollar. So we would have expected the Aussie to move higher, given that we've seen such weakness in the US dollar, but it hasn't necessarily been the case. We've come up against this resistance here at 68.98, and that has prevented prices from moving higher. So looking as though we may continue to see more sideways and choppy price action here. Similar situation with New Zealand dollar. Yes, so we saw a false breakout actually here. So we attempted to break through 67.79 on Thursday. We got above it on Friday, but then closed back below it, indicating maybe a bit of a swing failure there. And then we gapped lower on Monday. So this still remains under a bit of pressure. It's not really doing an awful lot. It's not getting carried away with the dollar weakness that we've seen. Requests come in there for euro yen, so let's take a look at that. Well, this has been going really well. If we go back all the way here, we can see there's been a very well-established uptrend that's been in place now since May 2020. Yes, there's been a couple of episodes along the way, but ultimately the trend remains very positive. We can see prices were trapped within a range here for a period of time before eventually breaking out, forming a consolidation wedge, and again breaking to the upside. So in the short term, appears to be a clearly defined uptrend. We've got 3 touch points there. The latest pullback to that trend line was met with buying support, and prices continue to move to the upside. So that's looking pretty robust and pretty strong. Let's take a quick look at the intradays here to see if there's anything shaping up on this side of things. Potentially looks as though we've got a bit of a short-term uptrend in place here. Have cut through a little bit of price action, but we can see there's been a nice pullback to that level today. And that looks to be wanting to move to the upside. Obviously, if we get a break of that short-term uptrend, then that does have the potential to trigger some further downward momentum. But overall, if we take into account the daily setup, things are looking pretty strong, and we can continue maybe to expect to see higher prices. I'll leave it there on the currencies. Steve, you can run us through some indices.
Yeah, cheers, Joe. Let's take a look at, I haven't looked at FTSE for a little while. Let's take a look at that. We had the candle from Friday's price action was negative. It's the shooting star candle after 3 or 4 positive days that week. So it was an overall positive week. We bit back into the previous week's down move, but we seem to have topped out at previous support levels, which would now turn into resistance, and stalled and started to reverse. Monday's price action was a little bit more negative. We took out Thursday and Friday's low from Monday, and not really doing a lot at the moment this morning. Again, you know, with the dollar weakness as well, a lot of the components of the FTSE benefit a lot from a stronger dollar, and then with dollar weaker, maybe FTSE's going to take a little bit of a hit on the back of this, so potential for further downside on FTSE. DAX on the daily, again, we've had the super pullback, but it has posted a lower high now compared to this formation we were looking at, which we thought could potentially be a head and shoulders formation, but obviously we've had this secondary shoulder pop up from out of nowhere, but it hasn't exceeded the previous right shoulder, so still has potential for this topping formation. Friday's price action was negative, and we did get down to last Thursday's low yesterday, but reacted higher, so a little bit of indecision on the downside, and we've the higher open this morning has given up gains already. So really looking at just below that 16,000 level as the support level. A break and close below there on a daily chart would be negative and could lead to further downside. So not looking too rosy on that side of things. However, the US markets are looking a little bit more promising. We've seen that decent rally from the start of last week, Monday the 10th, and really no holding it back. We posted another high yesterday. So really reaching out and challenging this 34,600 level. Hasn't managed to close above there, but who knows, maybe today. NASDAQ, again, similar sort of price action. NASDAQ's really led the way with the components of the tech sector really doing well out of the recent rally. We've taken out the 78.6% fib at 15,340 and posted another high yesterday, highest levels we've seen really since middle of Jan, 13th of Jan 22. That's like a decent performance on NASDAQ. Still doesn't make a lot of sense to me, but you know, who knows? I'm not in charge. I'm not in control of the buttons.
I was just
So
about to kick off with the next round of earnings as well. So
yeah,
that
I
could
mean,
be
potentially that could be a driver. Maybe
yeah,
people in the know. Surely they couldn't release earnings to people in the know before they release them to us. That's silly.
you
That'd
cynic.
be yeah. So S&P looked like it posted a bit of a shooting star candle on Friday, but yesterday's price action looked much more positive. Took Friday's high out and then also posted what looks like a shooting star, not quite as classic as Friday's, but it's still done the same thing. It's opened, rallied high and given up those gains quite quickly in the afternoon and closed a little bit lower. So really really need to sort of clear this resistance level that we have here. I mean, even if we take out, say, we look at fibs all the way back from here, we're around that 78.6 fib from the swing high back in start of January 22 to the swing low in October 22. 78.6% fib capping prices at the moment. Maybe that's a sign, don't know. But short term, this all looks pretty good. No real sign of a reversal yet, just little sprinklings of it. So yeah, onwards
well,
and
just
upwards.
to finish off there on the US indices, we've got earnings really kicking off today. So we've got Bank of America, Bank of New York Mellon, Charles Schwab, Morgan Stanley, all reporting today. Tomorrow we've got Goldman Sachs, we've got IBM, Netflix, and Tesla. So it's going to be a busy old week for these US indices, and it'll be a big test to see how these numbers come in and if it's got the energy and the momentum to carry on higher. So we'll obviously keep you posted later on in the week when we do our next stream. Good luck if you're trading any of those. Okay, Steve, let's kick on then to the gun to the head challenge, shall we? This is where we both pick trade ideas live on the stream, as if we had a gun to our head. So clearly not much thought or effort gone into them. We're just kind of picking something that we like the looks of right now. A couple of basic rules we need to follow. We must make sure that we have stops and targets in all of these trade ideas. The risk reward ratios must be 2 to 1 or better. So as a minimum, for every pound that we risk of our trading account, we are looking to make a minimum of 2 as a reward. The trade ideas are closed at 9 p.m. UK time. It just means we don't have to carry any overnight risk or be concerned about how positions are moving. So we're giving it a reasonable window, just over 12 hours to try and play out. And we are doing this on a live account, so we're risking 1% of capital per trade. I know that may sound boring to many, but by taking this kind of consistent approach and being committed to risk management and not wavering on that, we believe that in the long term we will see the benefits of that. So Steve, let's have a quick recap on where we're at with our trading account before we start, if that's okay. So we're at 1,744. We started with 2,000. So, clearly we've got a little bit of work to do to get back to where we started. The last couple of trades, we've got a bit of green in there for a start.
Yeah, we got a bit of green from Friday. That you had a winner on dollar yen. I had a very small winner on gold. I was shorting gold. You were buying dollar yen. Did okay, and it did better, but we closed out early, obviously at 9 o'clock. Yesterday I went for the same trade idea in gold and got stopped out, so that didn't work. That dollar sort of stayed lower. I was looking for a bit of a dollar rally, Joe, and it just doesn't seem to be happening. So really thinking about potential for that bullish flag in gold rather than the double quadruple top, whatever we were looking at. Yeah, have you got any ideas today? I mean, I've been sort of like flying through them, but not really. The Swiss and yen markets look like the ones that can be give us a little bit of a trend or something, or give us a little bit of an inclination. But I'm sure you've got your ideas about yen pairs, I think.
Yeah, maybe. I mean, I've traded dollar yen recently, and that paid out quite nicely. Yeah, I think probably yen again. I mean, we had a request to look at euro yen, so I did a bit of work on that. So maybe I'll go with that today.
Yeah,
based
why
on the
not?
fact that I made a bit of a positive case for it. So this was the reason being. The daily chart in what seems to be a bullish phase at the minute. We can see the pullbacks to the trend line seem to be attracting buying interest. Last couple of sessions, we've seen a bit of indecision, certainly yesterday, and today we're seeing the same, although it's very early in the session. If we take a look at the intraday, so this is the hourly, we can also make a case for there being a short-term trend line here as well. And potentially we've seen a pullback to that level and a bit of a bounce early on. So maybe we'll see a continuation higher there. So let's have a go at that, shall we? Let's get long of euro yen. I'm going to place a stop loss. Well, because there's plenty of volatility in this market, it's going to be a wider stop loss than I typically like. So I'm going to go with 155.32. That's actually below the low of this big candle here, this big impulsive up move that we
Yeah.
can see. In terms of a target, I've got to go 2 to 1 as a minimum. So that's going to take me all the way up to where appears to be a bit of a cluster of resistance previously, somewhere in this region here, which is at 157.10. So that's just a tad over 2 to 1, 2.14 roughly. So looking for a bit of continuation higher in euro yen.
There you go. We're in there, mate. The spread didn't really help you there, but yeah, risking 17.38 to make 35.60. Definitely a 2 to 1.
Perfect. Okay, did that give you any time, Steve, to find a?
Oh, look at that one, that daddy-o. Just hit its measured move target from something or other. So, oh, that's that bullish flag there, but
Flag,
that's
yeah.
yeah. I mean, the only one I thought about was maybe this break lower in crude oil. I'll go with that. Look to sell crude oil here, risking 1%. And looking to target a move. Well, let's see what the risk is first. I like to give it a little bit of a 60. Yeah, see, that's 60 pips. That's stop at quite a good level there. Why don't I go for that one, Joe? Just leave it, let it ride, baby.
Done.
Yep, yeah, done and dusted. I mean, I've got to stop clearly above the last sort of like 24 hours of price action. Breaking lower now and targeting a move to this, yeah, to sort of like the swing low that we had on the 10th of July. So there we go. That's me in.
Okay, good luck. 2 trades there then. So we are going long of euro yen and short of WTI. Best of luck to anybody that fancies a look at those today. Okay, let's make ourselves aware of the data that's due out today, because this can change things. Obviously, we mentioned we've got a number of earnings out. Some will be out before the market opens, some will be out afterwards. The banks, I think, are generally very well watched as a bit of an indication of setting the tone for the rest of the earnings season. Bank of America is out before market open, as is Bank of New York Mellon, Charles Schwab, Lockheed Martin, Morgan Stanley. All of these guys are reporting before the market open today. We get into some tech names tomorrow, as well as some other banks. But in terms of the economic data, at 1:30 UK time, we've got the US retail sales number. We've also got a Canadian inflation number, that's the consumer prices, and then we've got US industrial production at 2:15. Tomorrow morning, 7 a.m. So if we do a stream, it will be before that will come online. That number will be out, is the UK consumer prices. So the latest read on inflation in the UK. And then for the rest of the week, we've got some jobs number in Australia. We've got global PMI data next week. We've got the US Federal Reserve policy decision, as well as the ECB and Bank of Japan. So next week, combined with all these earnings that we've got coming out, we've got a lot of central bank policy as well. So we could be in for a bit of volatility. And being the summer months, volumes could be lighter, meaning that we see some pretty wild swings. So brace yourself for that. But for now, that's it from us, unless you've got anything else to add, Steve.
No, good luck, everyone, and be careful out there.
Indeed. Have a great day, and we will see you soon. Bye bye.